We move to central bank here, and RBI has issued final guidelines to amend framework for LCR, that is liquidity coverage ratio. Banks shall assign additional runoff rates of 2.5% to internet mobile banking enabled retail and small businesses customer deposits as well. Ankur Mishra is having more details.
Yes, Reserve Bank of India has now released a final LCR norms that is related to assigning additional runoff factor, whereby the retail and internet banking enabled mobile banking was enabled, and therefore Reserve Bank of India is now saying that 2.5% additional runoff factor should be there, which should be assigned by the banks. Remember, earlier draft norms were issued where the expectation was that 5% additional runoff factor should be assigned, but the final norms have only talked about 2.5% additional runoff factor. So therefore, if you calculate where stable deposits are there, 7.5% additional runoff factor should be there compared to 5% earlier. Similarly, the unstable deposits will attract 12.5% additional runoff factor compared to 10% earlier. Now, Reserve Bank of India has estimated net positive impact of 6 percentage point on aggregate LCR levels. This has been calculated based on the data which is there till 31st of December 2024, and more than that, all banks will continue to meet this kind of additional LCR requirement. If you see the current situation of the banks, and new norms will come into effect from 1st of April 2026. Remember, the earlier implementation was a year earlier, that is 1st of April 2025, but the current norms may provide some respite on the liquidity level of banks.